Hey everyone, how's it going? It's Saturday here with you. Go over a just a generic video, not time sensitive or anything. For longtime followers, might be it's just going to be more of the same. But for anyone new, or just to clear some things up for anyone new. So let me just talk about simple buy and sell points using stock. So if you're more advanced than that and you are into selling options, you'll know how to use this data the same way as buy and sell points. So just keeping it really simple when Apple is not very volatile. And here is a chart. Say Apple opens up, right here on a Monday in the middle, and Apple gets down here. That's going to be your buy area. So you buy, 10 shares. When it comes back this way, go ahead and sell those 10 shares. When it gets up here, you can go short and then, buy them back down here. So it's just a real nice buy and sell points, really simple. And let's see how that, would work out. This is just Apple on a 6-month daily chart. And here's Apple's VIX. You can also pull up, the volatility, a volatility study, implied volatility, or go to ivolatility.com or look at just the median figure. But it works best using a simple buy and sell points like that when the volatility is lower, the better. But let's just say about 25% volatility is a great place. It really works great at that range. And so here's an example of the volatility, the Apple VIX down here at 23 area, 22, let's call it. And let's see what happens to the stock. So on the 25th, we have right here. And then on the 7th starts to creep up. So there's this nice little week in here. And here's the 7th on that. So Apple's just in this nice tight little range, $25, $30 range. It would have worked out perfect just using a simple little buy and sell. Well, when Apple gets its volatility up there and it's such a high dollar stock now, this is already high probability using these buy and sell points because odds are it's going to be coming back down this way. Odds are when you buy here, it's going to be coming up this way. But like I said, Apple's such a high dollar stock. We've had such drastic moves. You can make this even higher probability, and I'll show you how you can do that. So instead of using these as I'm going to go ahead and short the stock here. Say Apple's here, I'm going to go ahead and short it here. Instead of using it as a sell trigger on the way up, use it as a sell trigger on the way down. So Apple goes up, let's say you have zero position. Apple goes up, no big deal. You let it go as high as it wants. And let's use a recent example of people ask, Trav, how do you catch that when Apple topped 644 and dropped $100 down to 550? How do you catch that? And again, this is pure hindsight 2020 trading. The thing that my biggest fault is I know the facts versus the media rumor and all this stuff. So that's why I wasn't looking to sell the stock or do anything with it. We were too close. We were just way too close to this earnings date. And again, where it gets in the way is I know what's real versus the media's fiction. And so that is one of my major faults. But let's say earnings wasn't coming, and let's see how you could have used this data, and maybe I possibly would. If earnings wasn't here, I would have used it this way. But just for future education, here, so Apple comes up to 644 in this case. That's perfectly fine. We don't have any position. Well, when it starts heading down, this is extremely high probability if this turns into a sell signal on the way down. Because not only is the stock trending down, you'll have profit taking, these calls will add to further pressure. So you just have so much momentum. As soon as you hit 629.99, boom, you sell the stock, and let's see what happens. So this is on a weekly, and this is actually taken from right here, from this day. So Apple, let it do its thing. Boom, turns into a sell signal right there, that 630. And you would have let it fall and fall and fall. And on this weekly, the stock closed at 605. So again, it's not a traditional buy point here anymore. Let it go, see what happens. I always talk about taking, half your profits here in the middle. So that's fine. Let's say, boom, sold 100 shares, bought back 50. House's money, see what happens. We do not buy him back here. See what happens. You would buy it back on the way up. What happened? It never went back up. It stayed here, closed this OPEX at 605. We would still have 50 shares short on. Now, let's see what happens the next week. So here it closed at 605. The next week, it keeps dropping all the way down to 5. What was the low? 578 was the low right here, and then it came back through 580. So 578 is the low. So here's the next week. This expired right here. On to the next week, which became a monthly. So we would still have that short on. Apple opens up, keeps dropping down to this area. Well, it went, and we would still have that short on. Well, it went to 578. That's fine. Our next target, we're going to be looking at 560 and see what happens there. But remember, these are your buy points coming back this way. So Apple dropped to 578 right here, and then it went to 579, 580, boom, you buy it back, you're done. You're out of that position. So you just went short from this 630 all the way down until it happened to come cross back over one of these. So that's that. So there's that short position. We would have gotten out of it right here when it crossed back over. It dropped to 578, crossed back over to 580, you're out of it. Now, let's see what happens with the stock. It comes up all the way to a high of 610, which is fine. So we have no position. Apple bounced all the way up here, and this is real time from the April expiry. This is what it looked like. Apple comes up to this 610. We have no position on whatsoever. It can go as high as it wants. Well, using extreme high probability trade, when it comes back down, that will be our trigger to go into position. You would sell short the stock here. So Apple comes up to 610, like we said. You don't do anything with it. Don't do anything with it. And right here on this day, boom, it crossed back over 600. It becomes a sell point, and then same thing. It never crossed over. Just to keep this simple, what happened is it went down to 555. So what happens is on this day, I looked back on 420. It never crossed back over. It kept going, dropping, and then it dropped to 555. You would have still held it, and you would have bought back here at this 560 when it came back over. So all in all, that was probably one of the more confusing videos I've ever done. But in conclusion, high probability, sell point, buy point. If you want to make it even higher probability when you have high volatility, use them as a sell trigger on the way back down, because very high odds, like I keep saying, it's going to be coming this way. This is not a traditional buy anymore. It's only a buy on the way up. So sell on the way down, buy on the way up. And that's how you can use this to, catch those tops and bottoms. Again, I didn't do it, not saying I did. Earnings was too close. I was looking at the fundamentals. But if you were a machine, that's how you would have done it. So have a good weekend.